Imagine if last year, May 12, 2020, I knocked on your door standing 7 feet apart because I'm an overachiever, and I asked you if you accepted Jesus Christ as your personal Lord and Savior. No, I'm just kidding. But imagine if I did knock on your door and I tried selling you this bottle of soda for $1. Now imagine if today I asked you knocking on your door if you wanted to buy this can of soda for $1.04. Now, chances are that 4 cents probably won't be that big of an issue in terms of your financial decision. And while I personally can't think of the last time I allowed 4 cents to be a deciding factor in my financial decision on anything. It's not like Americans are saying, oh man, I love to purchase that season 4 DVD of The Voice, but it costs 4 cents more than what I can get on Amazon. Now, where am I getting these 4 cents from? Well, it just so happens that this morning, the Wall Street Journal released an article stating that the Consumer Price Index rose 4.2% the last 12 months. Now, 4.2% doesn't seem like much, but if we zoom in for a second, Hey, what's going on guys? Daniel here, one half of the Kwok Brothers, and in this video, we're gonna talk about inflation, specifically in this year of 2021, what caused it, and also how we can invest based on how inflation fluctuates. And by the way, guys, I hope you're still with me by the end of the video because I'm gonna be sharing something that I'm hearing nobody else talk about in terms of what's actually causing inflation in the year of 2021. And of course, guys, don't forget to like this video and subscribe to our YouTube channel as we try to make videos that help as many people out as possible when it comes to financial literacy and exposing financial truth. All right, back to inflation. So it's no secret that the cost of goods and services has gone up rather significantly this year. And well, even the master Yoda of investing himself, Warren Buffett, has made numerous comments sharing his concerns about inflation. Now, whether you agree with the GOAT of investing or you disagree with him and you think Warren Buffett is like that crazy old guy in the corner talking about New World Order, you have to admit either way that a lot of prices of goods and services has gone up. For example, prices of used and certified pre-owned cars have shot up to new record highs in terms of their prices. Lumber has hit record highs as well. And even the price of chicken, no, not that chicken, the chicken that we actually, yes, that chicken, has even seen spikes in prices recently as well. But even with all this inflation going on, there are still some of us, especially those who try to showcase their advanced economic knowledge via arguments in the Facebook comment section, who still truly don't know what inflation actually is. So please allow this 20-second cutaway to explain. Thanks, Daniel, from another room. Now guys, to make things really simple, inflation is simply the decline of purchasing power of a given currency over time. Another great way of putting it is that the rate at which the value of a currency is falling, and consequently, the general level of prices for goods and services rises. And generally speaking, as it increases the price of goods and services, it also tends to increase the value of certain investment vehicles such as stocks, real estate, bonds, etc., etc. So inflation is indeed happening in the year 2021. But of course, what caused it? Well, I happen to have 2 theories in terms of why that may be. So theory number 1 is a little bit more obvious, and which is the amount of stimulus and government intervention that has been happening pretty much the last 18 months, aka fiscal policy. Now, hear these numbers out. Between all 3 rounds of stimulus, the federal government issued out about $850 billion to the taxpayers. If we break it down even further, the first round, known as the CARES Act, issued $292 billion. The second round, known as the Consolidated Appropriations Act, you got to stick your pinky out as you say it, issued out $164 billion. And the most recent round, known as the American Rescue Plan, issued out $411 billion. But of course, that's not all the money the government spent. There's way more in 2020. As a matter of fact, according to Forbes, the US government spent over $6.5 trillion in the fiscal year of 2020 that ended in September 30th, making it the record year for the most the US government has ever spent in one fiscal year. The increased government spending combined with declining revenue resulted in more than $3.1 trillion added to the national debt. Now, here's what's also crazy as well. And on top of all that, government revenue went down 1%, with revenue being $3.42 trillion for the year of 2020. So let's think about this, guys, practically for a second. Imagine you have a household, right? You have a husband, a wife, and let's say you have their 2 kids. Now, let's say their household income is approximately $343,000 in 1 year between both of the main income earners' income. Now, let's say they spent $655,000 and they also have a household debt of $2.8 million, practically speaking. So to summarize, they have an annual household income of $343,000. They spend $655,000 on God knows what, and they also have a debt of $2.8 million. Am I the only person that thinks that there needs to be a change in terms of the family spending habits? Am I the only person that thinks that they should probably hire a financial planner or somebody who's very good with money to start rethinking what their income and expenses and their spending patterns needs to be? I don't know. Let me know your guys' thoughts in the comment section below. Am I alone in this? The second theory is actually something that I've heard nobody else say, but I think this is actually a pretty good theory as to why inflation occurred so much in 2021. And that, my friends, is the rise of cryptocurrency. I mean, let's think about this for a second. Imagine if I bring back this soda can. Yes, the return of the soda can. Let's say that this soda can right here is worth $1. So let's say I sell you this soda can for, let's say, $100,000, right? So you have $100,000, I have this soda can. And you give me that $100,000 for this Sprite. So congratulations, you now own this soda can. Now imagine if stores, Amazon, and all these different businesses started accepting soda cans as form of currency for the exchange of goods and services. That would actually increase inflation and increase the price of goods and services because, well, beforehand, right, all we had between you and I, the purchasing power was $100,000. Because, well, you gave me $100,000 for this soda can. But obviously, if the soda can is now worth $100,000 and other people, stores and commerce and merchants are accepting soda can as a form of payment, well, our purchasing price has now doubled. Because, well, guess what? I have $100,000 in actual cash and you have $100,000 in the form of this soda can. And if we go down to the store, they're going to accept the soda can and the dollar equally. So now our purchasing power is $200,000 between the cash and the soda can. That, my friends, is what allowed more competition, more currency circulating in our market because, well, now that currency is not just green pieces of paper anymore, it's also cryptocurrency. So that right there gives purchasing power more expendable, more exposed into the general masses. And, well, the reason why I bring up this point is because, well, guess who are the individuals who predominantly invested in cryptocurrency? Well, it wasn't the big institutions. A lot of the big institutions actually shut it down because they didn't see it as a legitimate currency. Well, it was a lot of people like me and you, a lot of other YouTubers who bought into Dogecoin, who bought into Bitcoin, into Cardano, Ethereum, you name it. And well, considering that cryptocurrency, especially Bitcoin, is starting to become a little bit more accepted in terms of exchange for goods and services. For example, Elon Musk saying that you can now officially use Bitcoin for Tesla to purchase Tesla products and Tesla cars. Well, that's going to create more purchasing power, thus giving us inflation and increase of prices of goods and services. And to give you guys even a further look in terms of how cryptocurrency is affecting inflation, I mean, check out the recent market cap changes for some of the cryptocurrencies out there. Bitcoin officially now over $1 trillion in terms of their market cap. Ethereum is at $464 billion in market cap. Dogecoin is at $59 billion. And even Tether is at $58 billion in terms of their market cap. And well, there's tens and tens more cryptocurrency assets out there with market cap rates exceeding $50 billion. So if you add all that up and you consider how fast a lot of these different cryptocurrencies may be accepted in terms of exchangement for goods and services, well, you can see kind of how inflation can get out of control in the next 2 to 3 years. Now, guys, if you have any other ideas and theories as to why inflation has gone up in 2021 and really ultimately why prices of goods and services has increased so significantly in the last 12 to 18 months, please let me know in the comment section below. I would love to hear your thoughts. But with all these things said, of course, this leads us to ask, well, how do we invest and protect our finances during inflationary times? So let's go ahead and use real estate investing as an example, because at the end of the day, I consider myself to be a real estate investing expert. My thoughts for investing during inflationary periods is to focus on dividend cash flow investing, meaning that you don't buy properties unless they cash flow within the first 30 days. Now, having said that, a lot of critics will say, but Daniel, if I'm overpaying for the property, doesn't that cut into my cash flow? And to that, I would respond by saying, yes, but why would you want to pay a higher price than what it's actually worth? I mean, isn't that how thousands and thousands of real estate investors lost their shirt 13 years ago in 2008? So to conclude my thought, I would say if, and that is a big if you're going to buy real estate as an investment during inflationary times, for one, do not buy based on how much you think that property will go up in value. That's one of the golden rules in real estate investing is you never buy based on appreciation. Secondly, I would say establish long-term financing. Now guys, I get it right now, it's super tough to establish long-term financing with the banks because, well, right now we have very low, record low interest rates, and banks really aren't interested in giving you that rate for the next 20, 25, 30 years, which is why I'm a big advocate, especially right now, for seller financing. Now, for those of you guys that don't know what seller financing is, what was that? What was that book? You can tell the people watching this video what seller financing is and also how to invest in real estate. Oh man, you guys should totally get this book at 0to75units.com. And last but not least, number 3, make sure that your investments are providing cash flow for you starting day one. Now guys, let me know your thoughts in terms of how to invest in inflationary periods, and also let me know your thoughts in the comment section below with everything that we talked about in this video. Do you think we're about to see hyperinflation? Do you think that we'll see an increase in inflation? Do you think the price of chicken will continue to go up? Let me know your thoughts in the comment section below. And of course, guys, as always, don't forget to like this video, subscribe, and also share this video to your friends so we can all have discussions about it. Thank you guys. I'll see you guys in the next one.